Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Today we're going to be talking about 5 stocks that I am buying right now, and it's up to you on whether or not you buy them as well, because I'm not a financial advisor. I cannot give financial advice, so it's up to you to listen to me or not. I have a master's of science in finance. I've been doing this for years, so it's up to you. You do you, I do me, we'll be good to go. Anyways, if you guys don't mind leaving that early like on the video, liking the video is the #1 thing you guys can do to help me out here on this channel. And also subscribe for more content, hit that post notification bell down below, and without further ado, we're all going to be all set and we're all going to be good. Anyways, if you guys wanted to check out my trade alerts, boom, you can click that link right there or hit that join button down below. Get access to these trades before they go live on YouTube. And with all that being said, let's get right into the video. So, as you guys can see, we have the first stock right here, which is Meta Platforms. It used to be known as Facebook. It used to be known as Facebook, but now it is Meta Platforms. You're catching this one on a bit of a dip. Obviously, it's up a ton since its pandemic lows of 146. But if you're looking for this one for the long term, it's better to get it now at 334 than 384. It also has the obvious catalyst of being Meta Platforms now. It's not Facebook, so they're expanding into the metaverse. The metaverse is a huge hot topic right now. I do think that this is great news for Facebook, and I do think buying the dip on this Facebook run would be a good idea. As you guys can see, it's pretty much used this 200 moving average as a solid buy point every time it has hit it since its pandemic lows. Even before the pandemic, you were seeing it bounce nicely off of that 200 moving average. So if you think that's going to happen again, this is definitely a solid buy. And if you wanted to add a metaverse stock into your long-term portfolio, obviously Facebook would be the one to go with. If you guys wanted to check out this charting software, this is WeBull Desktop. You can check it out using the link below in the description or in the pinned comment section. I'm going to throw their promotion on the screen right now. They're giving away up to $2,300 in free stock just for signing up and depositing at least 1 penny on their platform. So you can win up to $2,300 as long as you deposit 1 penny on their platform. Plus, you get an amazing financial analysis software. It has everything. You can do technical analysis on it. It has some of the best charts. I think they're even better than TradingView's charts. You can have the option chains on it. You can have moving averages, Fibonacci retracements, financial statements, analyst ratings, order flows, level 2 data, other things as well. It has almost everything you need to analyze a stock, and that's why I really enjoy this. Even if you don't want to put your full portfolio over there, I think it's worth at least having a little bit. You can also trade cryptocurrencies, and they also have an amazing iOS and Android app as well. So it's definitely worth checking out, even if you don't want to go all in on it. And the link is below in the description or in the pinned comment section to check it out if you guys want to. But without further ado, let's just get right back into the video. Anyways, this brings me into the next one, which is Activision. It's the same deal. It's the same stock, but it's not the same stock. Obviously, it's a different stock. But it's the same deal as Facebook, where you're getting it at a massive discount. As you guys can see, it's worth $68 per share. It had an all-time high of $104 per share in around January of 2021, and ever since then it's been pretty much only going down. It had pretty bad earnings. They delayed 2 of their games, and they said it was not going to have a great outlook for holiday season. But with that being said, there's almost always a Christmas rally, not almost always, but there's usually a Christmas rally leading into December and November, and Activision, at least last year, they benefited from it greatly. So even though they said in their earnings report that holiday season might be a bit of a harder hit, just seeing how much this stock has been hit since February just shows that you're getting it at a discount. And a stock like Activision, if you go to the monthly chart, it usually recovers from these. It had a similar thing right here in 2018. It went all the way down to $43 a share, and it did in fact recover, going under that 50-month moving average right there. So I do think Activision could recover from this, and it probably will be a solid long-term pick in my opinion. So this feeds me into the next point, and this is ARK Investment. So ARK Investment, if we look at this daily chart, it's a little bit different of a story, as you guys can see. Again, another February peaker right here. February of 2021 was the height of, well, the growth stock bubble. So a lot of growth stocks were in fact hit a lot. A lot of them still have not recovered. ARK Investment is included in that. And in the year of 2021, Cathie Wood has been a bit ridiculed because her performance has not been the same as it was last year. I mean, just look at the growth that it saw in 2020. But then in 2021, it's been a down year. So this is what I see as being a greedy, while others are fearful. Again, two of Cathie Wood's top picks are Tesla and Bitcoin. Those two are at all-time highs. Tesla's at over $1,200 per share. Bitcoin's over $60,000 per Bitcoin. If ARK Invest doesn't follow that path, I don't know what's going to happen. I know for a fact that ARK Invest has similar type of high-risk investments as Tesla, as Bitcoin. They're destructive innovation. So I do think that ARK Invest could definitely break out of this trend that they've been facing and go back to all-time highs because of sheerly the fact of Tesla and Bitcoin. ARKG, this is another one, Genomics Revolution. Definitely something that could potentially make a comeback, and this is the fun that you'd want to get into. So ARK Invest, I do see some upside personally. And again, I'm adding to all of these stocks, so I'm putting my money behind where I'm saying. OCGN, this is another one where I noticed, I'm not going to say it's the best long-term pick just because I did not do a complete fundamental analysis and I don't know exactly the fundamentals on this one, but what I can tell you, and this one's more of a swing trade, is that every time that it has gapped down on this daily chart, so this is a completely different thesis than the other ones, all right? So this is, I just want to put that in your brain right now so you're not expecting it to be like some long-term set and forget type stock. This is what I'm looking for, all right? So every single time that this thing has either gapped up or down in the past year, that gap has been filled, right? So you can see right here, in February of 2021, it gapped up to $18.77 per share. That gap was filled. You can see it got filled on this wick of this candle right here. It was also filled again right here. Then you can see, again, right here, it gapped down. It gapped down, it hit a low of about 742, but then it filled that gap right back up multiple times, right here, and then right here. Then, again, right here, it gapped down, all right? So this is more of a technical analysis play than the other ones, which makes it inherently more risky, right? But it filled that gap up again right here on 6/29/2021, all right? So you're getting the point here. Again, right here, it gapped up on the daily chart. That gap was filled right here to 771. So my thesis right here with this play, OCGN, is that we just got a huge gap down from about $18 a share all the way down to underneath $10 per share. I do believe that we will be getting a gap back up to about $12.29, which would represent roughly a 20% gain on the trade, and even more if you were to play options on it. I'm not saying to go buy options on it. I'm just saying you could potentially make some more money. So that's what I'm seeing in OCGN as well. SDC, I believe their earnings are next Monday on November 8th. So Smile Direct Club, I've talked about how this one could potentially see a short squeeze. Well, the other day we had Avis Budget Group go under a short squeeze when earnings came up. SDC, if we look at their financials, they're up 62% in revenue year over year. If we go to net income, it's not really saying. But their gross profit, that's what I was looking for. 120% year over year. All right? So ever since their IPO, this stock has pretty much gone down, and they've had a good year in 2021. So there's a good chance they could have some really good earnings for SDC. So my thesis is that they're going to have good earnings, and that could potentially perpetuate a short squeeze. I'm not promising it, but it can happen. Avis Budget Group, people shorted that before earnings. SDC is more highly shorted, so if SDC has good earnings on Monday, it could potentially be a multi-bagger stock. And it's still sitting down right here near low, 536. It's really hard to get in the $5 range, but you could have if you were diligent. This is a very decent price for SDC, and there's probably not much downside. It's still another low right here, $5 a share, another low right here. Not too much downside. Only back here in August it got down to 463. So this is another one that would be more of a swing trade than a long-term investment, but I do see some upside. So I like to include every single type of trade right here. You know, we got the long-term investments, we got the ETFs, we got the SDC, we got the swing trades, SDC and OCGN. So that's what I'm seeing right now. These are the stocks that I'm looking at, the ones that I'm buying, some that I have a lot of conviction in, and I do believe that you could see some upside in a lot of these stocks. This was a different type of video than normal, but I wanted to make it just because I think that it's important to get some diversification in your portfolios. I know I talk about Progenity every single day, but I'd be lying if I said my portfolio was 100% Progenity. That's just not how I invest. I do have large amounts of diversification, and I'm never going to invest more than I'm willing to lose. So I'm not invested more than I'm willing to lose into Progenity, even though I do believe Progenity probably has some of the best upside. And that's why I'm talking about it right now, because these stocks obviously weren't Progenity. So you can buy Progenity. You can watch all my 100 other videos on it if you want. But these are the other stocks that I think could potentially see some good gains in the coming weeks. Again, OCGN and SDC would be the more risky ones, and Facebook, Activision, I think those are safer ones, and then obviously ARK Invest I think will follow Tesla and Bitcoin. So those are my theses. I hope you guys enjoyed. If you guys disagree with them, that's completely fine as well. Leave a comment down below. Like the video if you guys haven't already. It's the #1 thing you guys can do to help me out here on this channel. If you guys wanted to check out trade alerts, boom, right here in the top right corner, or hit that join button down below. And if you wanted to check out WeBull, which was this brokerage that I was just using to show you guys all these stocks, you can get up to $2,300 in free stock just for depositing at least 1 penny on their platform. So you sign up, make an account, deposit 1 penny, boom, you can get up to $2,300. So check that out. Links below in the description or in the pinned comment section. And that's about it. I hope you guys have enjoyed, and I'll be seeing you guys next time. Let me know if you guys like this type of video. Peace.